Recently, U.S. President Joe Biden signed a bill that suspended the U.S. government's $31.4 trillion debt ceiling, averting what would have been a first-ever default with just 2 days to spare. And around the same time, or shortly after, Saudi Arabia pledged unilateral oil production cuts of 1 million barrels per day in July, on top of the 1.4 million barrels per day cut, which took effect this month. Crude futures were up $3 in the hours after the news broke. The prospect of higher global crude prices comes at an unfortunate time here on the continent, where rising cost of living, high inflation, high food costs, and more have come together as an unfortunate burden for many. My guest is Benjamin Boachie, Chief Economist for SecondStax. Benjamin, welcome to Business Edge. Thank you for joining me today.
Thank you for having me.
So it's sort of like a situation of that saying where a butterfly beats its wings and then we have a tsunami in a different location. But in terms of the U.S. debt ceiling, let's start from there. I think it's really important for us to emphasize how important it is. If the U.S. had gone into a default, what would have been the impact on African economies? And thankfully, that didn't happen. But I think we need to realize the significance of what globally was averted.
Absolutely, yeah. The debt default scenario in the U.S. Would have been a catastrophe globally, and that would have been the case on the continent as well, especially because the African economies are very driven by commodities, and commodities are priced typically in U.S. dollars. So U.S. debt default would have impacted the continent quite severely.
So now there's a deal in place, and it suspends the debt ceiling until January 1st, 2025, which is quite as much an economic conversation as it is a political one for the U.S. What bearing, if any, will this deal now have on African capital markets? What are we looking at here?
Well, beyond avoiding catastrophe, I don't think we'll see too much of an impact here. Now that the deal is in place, you kind of go back to the scenario prior to the U.S. approaching its fiscal cliff. And that scenario, as you've been describing in your show, is quite precarious, right? You have a softening in the U.S. that's forecasted, even though they've managed to beat that forecast quite well this year. But then you have the Eurozone that just entered technical recession. You have exports in China that are also softening up. So those are the three largest economies in the world, and they're going soft. You can see why that could be a problem.
So on the side, let me ask, we've heard about the potential for a global recession, but with the Eurozone going into recession, are we seeing signals that we could possibly see a U.S. recession, which then drags the rest of us, unfortunately, into a recession as well? Where do you put that in all of this equation we're seeing in the past few days?
I wouldn't look at it like that. The U.S. economy, it has an engine of its own. And it's actually been quite resilient in the face of the shocks that we've all been dealing with across the globe. So I wouldn't read too much into the Eurozone recession.
Interesting. All right. So we talked about African capital markets just briefly. So let's go to that, because they've had it's been a tough time. Let's just be very honest. And some data does show that even despite having the best performing stocks and bonds globally, Africa's exchanges are not getting the investors they really should be getting. So Benjamin, let's look at that. In terms of the positive developments that have gotten this good data, what has it been?
So your question is, why have the capital markets in Africa not been getting the
No, before we get to that, what are the positive developments that have brought attention to us?
Mm-hmm. Right. Yeah. So, here at SecondStax, for example, that's primarily what we do, right? Bridging the capital markets across the continent, I think, and we believe is one of the most important factors to making the capital markets what they should be for investors. And now that you have Ghana and Kenya connected, you are soon going to have Nigeria on board. You'll soon have BRVM, that's Francophone West Africa. You'll have a deeper capital markets, and that change, I think, is going to be groundbreaking for the capital markets going forward. It's in the very early stages, but it will be very impactful.
We have some breaking news coming in, but let's see if we can just continue with our conversation as we get that in now. And so I need to ask, because as we talked about the positives of the African capital markets, what are the challenges they've also been experiencing? Because if they're doing so well, if they're globally best performing, why are they not getting the investments they need?
Yeah, I mean that's a good point. The question there, I think, has a lot to do with the friction that's kind of built into the capital markets, and that we, all need to kind of work to get rid of, right? If you're trying to move capital out of one country on the continent to another country on the continent, the infrastructure historically hasn't really been in place, and it's now starting to get in place. And because of that, we can look forward to that. The other factor is political risk, right? I mean, historically, the idea has been that there's greater political risk here on the continent, and everyone needs to redouble their efforts on the policy front to eradicate that perception.
All right, Benjamin, a quick interruption. You can see on your screen now live pictures coming to you from Nigeria's federal capital, Abuja, and also coming from the National Assembly. The video and the pictures you're seeing are the collation of votes that are happening on the floor of the House of Representatives. Today is the day of the inauguration of Nigeria's 10th National Assembly. Just a few hours ago, we did break news to you that Senator Godswill Akpabio had been, of course, elected as the Senate president as well, and then he also has his deputy. But now we're at the House of Representatives, which is looking to elect a speaker, deputy speaker, and the rest. We need to have the National Assembly in place, this 10th National Assembly in place, to go into the complete cycle of governance after the inauguration of President Bola Ahmed Tinubu. So live pictures coming in from the House of Representatives, votes collation going on. I think you just saw somebody who may have felt like he's just ahead of the rest of his competition, but from the Senate, Senator Godswill Akpabio is now Senate President. We are expecting to hear who the Speaker of the House will be shortly. All right, Tajuddin Abbas is the name. Tajuddin Abbas, I beg your pardon, is the name I'm hearing right now. So once we have a full confirmation of the list of officers of the House of Representatives, we'll get back to that. All right, Benjamin, as we continue to follow that, let's continue our conversations here. So you talked about political risk. You also, of course, mentioned around the issues of investments. Then what would be a logical, natural question then would now be, what are the strategies that we should expect from investors and stakeholders in Africa in order for them to, one, get more investment into Africa's capital markets, but also currently, navigate the current global economic headwinds that we're experiencing?
Yeah, in both of those scenarios, I think diversification is key, right? Being able to invest in multiple geographies on the continent, multiple asset classes on the continent is really important. And that is pretty much a rule you should follow when investing generally. So yeah, I mean, here at SecondStax, like I said, we're working on exactly that issue, right? Once you're connected to the entire continent, you all of a sudden have access to a wide range of commodities, a wide range of businesses, a wide range of diversified political risk, and that ultimately should provide investors with better outcomes in terms of returns.
All right, so there have been two very big global decisions that could have some impact. You've just told us now that the U.S. debt ceiling deal shouldn't really it should be a limited impact that African economies feel. But let's look at the Saudi decision to cut 1 million barrels per day, especially in light of the conversation around crude oil. As I mentioned in international business headlines, we've seen that WTI is now around $67 a barrel. It's lost more than 7% in the past 3 sessions. So it means that what Saudi Arabia unilaterally decided really hasn't had too much impact. But in terms of that decision on our economies, what is it looking like?
Well, the impact on the African economies will be the same as it is everywhere else, because the global oil markets it's a global market, right? So the price is the price. And the fact that the Saudis unilaterally cut 1 million barrels per day, and that had within a week 0 impact, on the price of crude, tells you that it's just simply not going to have an impact generally.
So does it mean that OPEC Plus and OPEC members, Saudi Arabia being a very prominent, if not one of the most prominent, are really running out of options? They're running out of ideas to get a handle on this situation?
Yes, in a sense, sure. The fact is, the factors that are impacting the price of crude, there are just other factors that are of larger magnitude and just have a greater impact on the price than one country's cuts, right? And it's a very large global oil market. There are a lot of oil producers. So the fact that one country cuts, even a number as large as 1 million barrels a day, one, it doesn't mean that other countries that agree to cuts are actually living up to those cuts, and it doesn't mean that other countries like the U.S., where you just got permitting reform done, have any interest whatsoever in assisting with holding up the price of crude. So, that's one reason. And then you have something like the Russia-Ukraine war, right? That's a prime example of a factor that is both impacting the price of crude, impacting the price of food, and there's pretty much no clear time horizon for when that factor subsides. So, they can try, but there are just a lot of other factors that are going to have more impact.
And talking about those factors, as you've listed them out, slow growth in China, add to it now recession in the Eurozone, the Russia-Ukraine crisis continues, and Russia continues its exports as well. Where do you place the level in the coming weeks? Or in terms of this optimism, some are saying we should be expecting $100 in the coming week. Are you as optimistic as they are? Is that too much optimism given the current state of affairs? What do you think?
Well, I certainly don't think there's data to support the idea of $100 oil, in the near term. Like I said, you have the Russia-Ukraine war is the prime example. This is something that, Russia is a major oil producer, and it can't efficiently get crude to market right now because of what they've done in the Ukraine. Ukraine is a major food producer globally, grain producer, and they can't necessarily get grain to market as easily as they would like. So just on that front, right, you have the crude prices being impacted, and you have food inflation being impacted. And if you simply cannot find anyone on earth, I don't think, who can tell you definitively when this war ends, or when there's a way to solve this problem and to bring these products to market efficiently. So there's almost no way to make a sound forecast. I don't see how that could be done right now.
And it seems you've just wiggled out of my last question, because I wanted you to have a crystal ball that would give me some kind of forecast. Because with Saudi Arabia doing that 1 million barrels per day cut, and it feels now like a drop in the ocean, it's almost a question of what next, what happens next. So if we can't do a forecast on the pricing, what do you think are the next steps we should expect in the coming months as we look for some stabilization of the price?
Well, I mean, certainly you're going to look for headlines and news out of the key parts of the world. The U.S. economic data, Chinese economic data. We're going to want to see this rate hike race come to an end. Higher interest rates are really just really hurting us here on the continent, but everyone globally. And yeah, so just follow the data, and I guess beyond that, you want to adjust to an environment of low quality information, right? So stay diversified and stay hedged, and lean on your brokers.
All right, Benjamin, thank you so much for joining me. Benjamin Boachie, Chief Economist for SecondStax, a conversation on the U.S. Debt ceiling deal, and of course, Saudi Arabia oil cuts and impacts we can feel. Thank you so much for your time today.
Thanks for having me. It was a pleasure.
And before we wrap things up on Business Edge, you will be getting news at the top of the 12 o'clock hour, and that's News Central Now. But I think we can go back or give you some more updates on what's happening in the National Assembly in Nigeria. And that's, of course, at the National Assembly in the Federal Capital Territory of Abuja. So earlier we told you that there was ongoing vote collation for the Speaker of the House of Representatives. Now I can confirm that Tajuddin Abbas from Kaduna State has emerged as the Speaker of the House of Representatives for the 10th National Assembly. He defeated former Deputy Speaker Idris Wase and Sani Jaji. And also earlier this morning, Senator Godswill Akpabio emerged as the Senate President for, of course, this 10th National Assembly as well. His deputy has also been elected. Senator Baru Jibril has also emerged unopposed as Deputy Senate President. So the leadership of the 10th National Assembly, which was inaugurated today, is absolutely shaping up getting straight into the business of lawmaking, we expect and we hope. And we won't forget that just yesterday, President Tinubu signed into law the student loan package here in Nigeria. Expectations of an interesting National Assembly, especially with some of the criticisms that the 9th National Assembly, which was dominated by the APC, also, of course, experienced during the time of Presidents Muhammadu Buhari. But this assembly is said to be one of the most diverse, if not the most diverse, in Nigeria's democratic history. There are members of the Labour Party, the main opposition, the People's Democratic Party, the SP, and Social Democratic Party, SDP, I beg your pardon, APGA as well. So there is going to be some conversations happening and expectations of opportunities to reach across the aisle to different political parties. But 12 o'clock, we'll have more updates for you. That's 12 p.m. West African time on News Central Now, with the latest coming to you from Abuja here in Nigeria. I'll be wrapping things up. That's it on Business Edge. We have a website, which is www.newscentral.africa. We have a mobile app you can download. And of course, you can follow us on our social media platforms at News Central TV. I'm Tolulope Adeleru-Balogun. Do have a fantastic day.